Hello everyone, welcome back to another bookmap video. In today's video, we're going to have a look as to how we can use the bigger picture or the let's say the intraday time frame or a daily time frame into not having exactly a bias into when we're entering a trading session, especially when you're scalping. You cannot have a bias, but you at least need to know what the outlook for the market is. Why do I say that? Most of the days what will happen is the market is ranging 70 to 80% of the times. So what will happen is you do when you're touching the extremes, for example, if you have a balancing market or a ranging market, when you touch the extremes, you try to fade them, you'll get good opportunities. What happens on days like today, what we have on NQ over here is that you will get we have a live example that is going on. I mean, rips like these that happen a lot. So it again becomes important to know that this is going to be a norm in today's session, and how do we play it. For whatever reason, the event that has taken place, this is what is happening, and the whips are a lot. So on a trading day like this, you would generally like to stay away for the first half an hour or so. So that is what I prefer. And on really balancing days, you will immediately when the day opens, you will know with the help of the tempo itself that the market is not that volatile or that violent. I would rather say so. And your targets would be easily met if you take proper entry. So the location at these on days like this becomes really important. So I will just get the 5-minute chart on a daily time frame as well, so that we get to know what is exactly going on in the markets. The other settings are exactly the same like we discussed in the previous two videos where we started the basics of scalping. So we're going to have the same things today. So the primary thing is, I will just repeat for the sake of people who are coming new, is the first thing that we have is the heat map. If you see over here where my pointer is, you can see this darkish red shade. It indicates a lot of liquidity here. By liquidity, I mean there are resting orders. Again, if you've not understood this part, you can go ahead and watch my previous videos. So these are something known as the passive orders. Now that is why they remain in over here, and that is why they call resting orders. So I am not the aggressor in this case. And the dots that you see, like these green dots that are coming, again they're delta, and they are the market orders. So the market orders generally or always take the market. If you have to move the market in a particular direction, if the market orders can only do that. On the other hand, the importance of this liquidity and passive orders is that for example, when the market is going up and a lot of these passive orders start stepping in, and in spite of having these green numbers all the way, these green numbers, the footprint that you see over here is on a ranging on a range bar of 50 ticks. Okay, so when you see these green numbers, a lot of them, that means a lot of buying is coming in from when I say a lot of buying, it means a lot of market buy orders are stepping in, or are rather the buyers are more aggressive. The numbers are always the same. For every seller there is a buyer, for every buyer there is a seller. But whenever the market moves up like this, I want to know who is more aggressive. So when you see more of these green dots, it means that the buyers are more aggressive, and at these levels they were this was full of market buy orders, these green dots. So what does that indicate? That someone is stepping in to take the market up. Now what happens when people like these over here, you don't know for sure, but you see the liquidity on top over here, and the market hasn't touched this as yet. Now another thing that generally the market does is maintain efficiency. How do they do that? It goes there, absorbs liquidity, and then maybe comes down. Now that is not a standard rule. It can, sometimes it cannot. It is a 50-50 thing. So you may see before this getting tested, the market going up, enticing people, and going the other way around. Now these are resting orders primarily. So they can be stops, they can be, a lot of passive sellers that whenever the market reaches here, they absorb. So if you look at a micro time frame, let's discuss this particular segment over here, this range bar footprint chart that is going on here. So if you look over here, the liquidity over here started coming from approximately 20, 30, 35. If you look over here, look at these volumes, and when these guys these market buy orders stepped in, all these guys, when they stepped in and took the market up, and they held it for long. So how do I know that? it popped down, and as I keep saying, it came back into that range very quickly. So the last low, if you see, and the last liquidity zone was somewhere here where an absorption of sellers took place, if you look carefully here. So again, when it went up, people would have had the stops placed here, and you did see a liquidity, not as much as this time when it was here, but there was liquidity. All these stops were triggered and the market moved up. And exactly at this time, if you look closely, okay, at this time when the buying started stepping in, some liquidity started coming in on the upside. So again, this could seem that it doesn't mean you initiate a short. It is a really relevant information that you should always have, that when this is taking place, someone has started coming on the top. So it is likely that the move or this particular this particular move that is going on would range for some time before it finally breaks out. The other thing that could have happened is simply gone up, taken the liquidity and come down. Now when it happened over here for the first time, like we were discussing, like we discussed, it could go down and then come and pop up and take these guys down and then go back. So again, you have to play what is going on in the market. Now if, for example, let's say if I am targeting this liquidity zone, where should I actually enter? I should look for a point where I think I am going to get, an opt entry or a good risk reward. Where do I get that? If I take an entry here, there is already a lot of, I will just draw a triangle for you. So I will keep drawing these small rectangles so that we can make sense of what is happening. So if you look at this area, this rectangle, particular rectangle over here, so you see a lot of buying has been taking place all over this place, if you see, okay. And this is also the chart range volume profile that I have here. So it is quite evident there's only buyers here at this level, okay, and they're trying to move the market up. And it has been, this is the fourth or fifth attempt if you look at the Bookmap, this best bid and ask, and they've not succeeded as yet. So this is not my entry location, entry point if I am targeting the liquidity on top. I will just explain what is happening even now. So if you see, suddenly when the market did approach here, you see some sort of liquidity being added here, okay, immediately when the market came here. It does not always mean that the market will go down, but it is sort of an indication that it is likely that this range bound movement is going to continue. The market will go down before it again steps up, okay, and takes, let me delete this, okay, okay. So now let's go and see where our entry point could be. So the first point that I see is somewhere in this zone, and this is what I like to see. There is an absorption of sorts that is taking place, and if you look closely, there is a liquidity that is coming in. Exactly, it started coming in when we approach this point. So this would have been a good point for me to enter if I have to enter. And if I'm in a trade, what I would draw is, like you see, a big buy order over here. So I would like this to hold, okay. If it isn't holding, I would get tighter with my stop. Let's say if I had my stop here 5, 6, 7 points, I would move it closer to this liquidity zone, because the odds now increase if this breaks, that this liquidity is going to be sucked in before it moves up. So I would rather be placed or positioned somewhere here, so that if I'm going to lose out on a trade, I will lose lesser points. And I would target, the first target that I would have in my mind is the bottom of this rectangle, okay. So this is, the market generated information that I'm seeing in real time. Again, it is short. It will take some time for you to get used to this speed and looking at the markets. Now what I also want to tell you is, I'll just go into the longer time frame chart, okay. So we will get this on, and I would like to just have this like this, okay. So why am I getting this chart? Okay, so this is a very common chart. Whatever broker you have, you don't need anything fancy in this. So it does have a volume profile, which I get over here as well. So this is a 5-minute chart, okay. So why did I get this chart? If you look at it, what happened the previous day was this, okay. Now this up move, when I see something like this, if you see from this high volume node, obviously there was a lot of volume that wanted, or a lot of buying that was very strong, and they wanted the market to move up over here. Now if the market is that strong, it should have accepted this spike, okay. So the best place for the market if it had to continue long was this place, 18420. If you see this volume node, it opens below all these high volume nodes. In fact, it opens right at this node, gives a pop-up, and I mean, at this point you would have been wrong if you thought that the market is going to test 417 420 and then decide on moving down. But what it does is, it doesn't even, I mean, it just pops up to the little low volume node and moves down. This signifies that for the moment the market is not ready to go long. It is, firstly, it has reached the area that initiated this move up. It's gone down. It's even going to approach yesterday's low. So the odds are really, although there's a volume node that is developing here. Now, when you see something like this happening, okay, so although the value is here right now, but you see a sort of, don't be sacrosanct with the point that the value entirely hasn't shifted, but you see a lot of volume being chunked over here. So what does that indicate? It gives me an idea that maybe even if the market has to go down, it might pop up here and go down. And I would like, I mean, as of now, the odds are that this low, that is this one, might get tested for the, I mean, for a liquidity push, or taking out the stops and then going back up again. Okay, so that is what I am thinking. And if you see, the tone is bullish. I'm sorry, the tone is bearish. Okay, now whenever there's a bearish tone, you will also need to see the tempo. So if you are looking for fade trends on a bearish tone, what you want to see is the tempo. By tempo, what I mean is, for example, let's get back to the bookmap chart over here. Okay, so by tempo, what I mean is, how is the selling when it is going down? How big are the pullbacks? Okay, so as of now, presently, when you see, we've been seeing it for some time now. Let's clear the drawings first so that we can get a fresh look. So what I'm seeing, or what I'm observing is that the pullbacks are also decent enough. So I can, I mean, whenever the market presents me an opportunity, for example, some place here, like we were discussing when we were talking just a little time back. So it did go down, take out this liquidity zone, and then move back up. So when you see something like this happening, okay, so like we just spoke about when we were discussing the charts, now when you see something like this, it is again a good entry point. Where do you enter? When you see these big chunk of stops getting triggered. Why am I calling them stops? Because as soon as they're triggered, within seconds you see it pop up back again. Okay, so I've been talking this a lot in my videos. When I see something like this, I see a range. Okay, so this is clearly a range that we just saw, and this particular thing, okay, it goes down, sucks the liquidity, pops down, and comes back immediately back into this range, and takes this, like we just spoke about, this absorption. It was not, why am I calling it absorption? Because it tries to break this down, it doesn't, and it pops up again. So I will be very inclined to take an entry here. Again, the stop loss just here above this liquidity zone, because if this breaks, I am going to see something like this, what has happened here. So now that we've discussed this scenario, so even if you look at these bars, yes, there was some selling in this particular zone, if you see, okay, from about 300 to 218, and it is now starting to form a chunk over here. So why is this important? Now you have to understand, if you try and look for a breakdown here, it will not be so easy, rather fast. What do I mean by that? So it is going to continue like this for some time before it breaks down. So by the time you keep attempting these breakdowns, you will have lost a lot of points. So when you see these high volume nodes and the price cluster around it, look what happened over here. Okay, so this is a lot of time. It's about the first time it was here, it was about half an hour, then another 45 minutes, then if you look over here, it's another half an hour to 45 minutes. So you can have this, I've done a video on internal clock of the market. So when you're looking at smaller time frames, you would get an idea. So if I have started forming a chunk like I have over here, so it's been approximately 20-25 minutes. So I can expect another 2 to 4 candles, 5-minute candles in this zone before I can expect a breakout. If it happens before that, it's okay, I'm fine with it. I will go with a pullback trade onto the downside. If the breakdown is legit. What do I mean by legit? What do we mean by legit? By legit, what I mean is, this does not happen. Okay, it breaks down, takes down the liquidity and pops up again. Okay, so if that happens again, I'm not interested. Now again, if you see here, so we'll just look at the current scenario. So why did we discuss this? So I'm expecting it to just continue doing these ranging movements all throughout. So what I'm going to do is, whenever I'm approaching this liquidity zone, I see sort of an absorption. So again, I am trading absorption at this juncture. By this juncture, I mean till the time we break this this chunk of volume zone. Till that time, I'm going to trade absorption. That is, whenever the market goes up and these big green bars form, and I see a sort of absorption or numbers big enough, for example, something like this. Okay, I see, I would try and enter a short. Okay, for let's say if you're talking about this on a day like today, I will try and target 8 to 10 points against let's say 5 point stop loss. So you see over here, so this we would have missed because again this buying was not that strong, which I wanted. Of course, there was some sort of absorption and it will keep happening. And the other thing that happened is you can see that the liquidity here is still there. Okay, so these guys haven't moved and the market hasn't been able to test this zone. On the contrary, the market has a lot of times tested the liquidity on the lower side, but it hasn't tested this as of now. It doesn't mean that the market is not going to go up. I'm just giving you an information that you should keep in mind when you're looking at heat map, because it is a really powerful tool. So as of now, if I see, this is the zone 230 where a lot of liquidity is placed. And if for example I'm expecting a touch of this somewhere close to this. So when do I expect a touch of this? What I want is, the first thing is the 225 to be breached, go up. It might not break in one shot, it will come here. Let's see if it happens over here. Okay, so let's see if we get to see what I want to see. Okay, it goes up and starts hovering around here, and then I see something like this in this area. This a seller's trying to step in but failing, and then I enter my long if I have to go long in this area. Okay, because this is because I'm expecting a breakout, so I will not go, like for example now I'm not going to enter now. Okay, I'm going to wait and see some sort of see what they've done. Look at the chunk of orders that have come in. Okay, I'm not going to step into this breakout. Okay, I'm just going to wait, and I know if you look at this chart that I might see some sort of, even this is a big liquidity zone over here. Okay, so look at the buying that is coming. This is all stops. Okay, now what I would rather do at this point is look for a short. Okay, again, it is counterintuitive, but it is because of what I've just we've just explained over here. Why am I looking at that? So let's see if it pops up to 117 or somewhere close to here, where we can think of entering a short. Okay, why am I saying? Because I'm expecting the market to range over here and not break so quickly back up again. It will range for another 2, 3 or at least 4 bars before it takes down. Okay, let's see. So okay, this is the place. Let's wait and see. Okay, let's see what it does over here. Okay, so what am I waiting for? Like I said, I want to see some sellers attempting and failing if I have to go long, and similarly the buyers. This is not a move. This particular pattern is not what I like if I want to enter a short. I want something like this. You can call it an M pattern on a shorter time frame, or I'll just show you what I mean. Okay, and it is an attempt to move up and fail. Okay, I want to see something like this, something like that. So if it doesn't, I will just keep waiting and then look for the other side. Okay, so you see a lot of buyers again stepping in here, and the next liquidity zone is there, which is stepped in at this breakout. Okay, so now I can see some selling step in. Now let's wait. If we get a pullback to this zone, is where we will try and enter the short. Now the other thing is, if there is no harm in waiting and missing trades, people make a lot of fuss out of that. There is no harm. You just need 3 or 4 good trades, even let's say 8 to 10 points. If you can get 30, 35 points or 20, even 20, 25 points, that's more than enough. But you have to be disciplined and wait for your setup to show up. You have to wait and okay, let's see, wait for the particular pattern that you're looking for, because that is what is going to work most of the time in your favor. Okay, so And if you look over here, this is the low volume node and the previous day POC that was placed here. So I am expecting a rejection over here, because this is the place where it broke from not in a fierce manner, but it was really shaky if you look at it. So let's see. Okay, so till the time you'll continue. So over here it is still bullish, and why people would ask why haven't I entered into the long side. Again, I would have liked to see, like I just showed you, some sort of selling failing in here, because this is not a trend day on the upside where I can just enter for example this pullback over here, this 150 zone, which I would generally on a trend day on the upside or on the shorter side. This is a range or an area where I'm expecting the market to be range bound. Okay, that is why, although this is a third 5-minute bar that is going on the upside, I still am not confident on the upside. Okay, and that is why I'm waiting and looking for a better place to either go short or long. Even if I have to go long, did you see something here? Okay, this is interesting. So at this point, did you see this liquidity jumping? Okay, now this can be either to break it out or even spoof people and move down further. Okay, so this is what I would like to see. Now you see sellers stepping in and failing. So this is the place where you can, let's see if what it does when it comes here. And I have a heat map, I mean this place where I'm seeing some support. So this is a place I would like to enter long. Okay, I'm seeing that seller stepping in and failing at this point, and my stop loss would be hardly let's say 247, 4 or 5 points. Okay, and I would target at least this 53 over here. So let's say we entered at 47 or something like that. Okay, and do you see these guys again stepping in? You see this? I hope you saw this. So these two places, the liquidity has come in, and I believe that what they're going to do is hold it here and then move it up, and they're trapping these sellers for the market to go up. If we're wrong, we are wrong. This is our stop loss 43. Okay, 47 is the place we entered, and we're looking for 53. Okay, at least. So we've got almost I think 2-3 points is what we've got. Now if you look over here, these are buyers getting trapped. Okay, so again you have to wait it out. If you're wrong, we are wrong. But you get what I'm trying to look for when I'm looking for a pattern on either side. This is what I was waiting for all this while when I was looking for a pullback to go long. We might be proven wrong, but it is okay. We waited for a setup to show up, and only then did we enter. Okay, you again see these sellers getting absorbed, and the liquidity suddenly has gone away. So probably, yeah, our stop loss gets hit. So now you should be okay with the losing trades like this, because our risk reward will always be 1:1.5, and eventually we will be profitable even if we win 5 to 6 times out of 10 times. Okay, so let's wait and see if we find something else interesting over here, and then we will end the session. So like we discussed, this is again, we took a long trade, but this is what we were expecting, a range bound market, and the market going down. It's okay. So we're just scalping, but we have the bigger picture in mind, wherein we know that it will not break immediately when it has reached a certain point. Okay, because like we discussed, there's a chunk of value that has developed here, and it will take, like it has done here, take some time, hover around here, places like this, and then only will it move to one direction. So again, this is a good pattern that I like to see for entering into the long side. I mean, sellers getting trapped, and then let's wait and see how we see over here. Okay, so this is a place I would like to enter, that is 32, somewhere here. Okay, 32, and the stop loss would be again somewhere close to here, 27. And let's see, I don't think this is going to work, but let's see nevertheless. So what we've seen here is, again, I'm seeing an absorption of sorts, and let's see. Yeah, this is the breakout point, so that is why this has happened. So if you just scroll down, zoom out, you will see that, and your target could be this 37 over here, this thing up over here, because this is a selling point. Or another, if you look at this fractal pattern, another point where the market decided to go down or continue down from, and this is a chunk where the volume of aggression, or the aggression of sellers stepped in. So hopefully this trade would have worked in our favor. Let's see. Okay, and there's a lot of buying that is trying to step in. Okay, so this is worked in our favor. So at this point, if you want to continue, you can simply trail your stop loss till 37 or 38, wherever, and aggressively trail. Because, and when you see something starts, something like this popping up, a lot of volume dots, green coming up, and the market not showing signs of going up, you should aggressively trail your trade so that it doesn't pop down below. Okay, so again, you see, I think we had a stop loss of 4 to 4.5 points, and we targeted 5 to 6 points over here, which we got. So you can have an accuracy of even 50-60% and be profitable in the long run. And if you just, I mean, go, it doesn't matter if you lose. If you have that strategy and wait for it to play out, you always, I mean, be at an advantage in the long run. So hopefully I was able to convey some useful information to you guys in this particular video. If you have anything particular to ask about, or if you have doubts, you can certainly go down in the comment section and put it out there. I will try and cover the topics as much as I can. Okay, until next time, thank you guys.